Yes.
On the internet, we've been going, decade now without people having to really tell who they are. You can hide behind the screen and, scam and troll and do whatever. And with Web3, no, can't do it anymore.
Biggs and Boggs.
See how this goes. Do I look short on film?
A little bit. I think it's probably because I sit a little. I'll try to sit a little bit.
Ladies and gentlemen, welcome back to your future hand with Biggs and Boggs. I'm Marty Boggs.
And I'm Julian Biggs.
We got Spencer on sound and screen.
Spencer.
Thanks for joining us today, folks. Really appreciate it. Make sure you smash that like button. And without further ado, let's get into it. What are we up to today and how can we plan for tomorrow? Julian.
Today, we are going to talk about Web3 a little bit. If anybody's unfamiliar, we have had developments in the web, Web 1, Web 2, Web 3. We're going to talk about that a little bit. Price action heading down just somewhat. We are below the 200 again, so we're going to go over that and get into it with a little bit of market scope here. First,
Markets go.
So, of course, right now we are looking at the Bitcoin first US dollar chart on the devastating daily time frame. We're making a move to the downside again. I've extended the green box of support. I've also added this green line into play here. So let's get a little zoomed in and see what's going on. So we made our move through the orange line of resistance that I had from what I thought was a top back in December. We made that breakout there through the EMAs, through our support, and then into this resistance box. And I was talking, if you caught that update, thanks very much. I was talking about the price rolling over just at this point. Before we got into any red candles, I was talking about this price rolling over as we lost momentum, and that it was very likely we were going to come back down and test the 200 EMA. And then I made another update at the time of retesting this 200 EMA and said that we were looking for some consolidation in this area. We can see that we spent a few days there consolidating, eventually breaking through. So bottom of my range at the time of the last update was $42,000. You can see that the EMA has moved up a bit beyond that point, but breaking through it and now sitting on $42,000, just above this support box.
Emotional damage.
So, anyway, so things are still playing out, fairly close to what we've been saying here and following the EMAs and the price lines and targets. So we're now retesting this area of 42, which we didn't think was going to be a surprise if it did. But the question is now, are we going to go lower or are we going to get moving to the upside again? And now I do think there is more room to come down. So you can see we've made a lot of contact on this extra green line that I've added in here. So the chance of putting in a new low is pretty high again, and I think this low could be somewhere around the 40K to 39.5 range. So anyway, we're going to keep you updated, but I think we're just going to continue this sideways range. We extended the top a bit from 45K to 48K there, top of that orange box. So nothing out of the ordinary here. I think we're still just trading sideways and waiting for this move up again. So let's wait for that next low, and we'll keep you updated.
So, Web3.
Web3. So yeah, Web3, for anybody unfamiliar, we'll just kind of talk about the development and the history of the web. So essentially Web 1 was this read-only, and in this initial version of the web, a user was only able to read the content, applications, included the new websites, portals, and search engines and things like that. And then we had the development of Web 2, and this was going to be the introduction of things like social media. And, probably in the early days, it's like MySpace. So things we could interact with. And in this application, you were a enabled user to interact. So, for example, comment, like, post, etc. Things like that. You could be a creator as well as get involved with other people's content creations. But now we're moving into something called Web3. We've got this Web3 development. And now this is trust and verifiability. So everything's going to have a KYC verification, just like your...
Know your customer.
Know your customer, but like exchanges, Coinbase, things like that have this KYC verification now. So there's not going to be any...
Let's compare it to something more realistic that most people would use in the bank. If you're putting your money in the bank, they need to see your ID or whatever, right? Like people ask for who you are.
Yes.
On the internet, we've been going, decade now without people having to really tell who they are. You can hide behind the screen and scam and troll and do whatever. And with Web3, no. Can't do it anymore. You're going to be penalized. You're going to have demerit.
Yeah.
There's going to be consequences.
Able to be penalized, like you said. So now all these,
Fined.
and it's like you're like, oh, penalized. Well, I'm going to be penalized on the internet, but you don't understand is that it's not against you. If you're not a piece of garbage, you're not going to be penalized. You just want to use the internet and have it be secure and private and all this stuff.
Yeah.
But you know for a fact that you've got people trying to scam you everywhere, whether it's Amazon scams or whatever scam is coming in. People are trying to get you links and, you know, click into this or send us this for that, and you end up getting scammed. Where
and nowadays you can report it.
You can report it.
Some of that shit would get deleted.
But on
that's about it.
Web3, they'll just be able to track that information. And if you're a scam account, you could potentially be penalized for just having that account. If you're running scams on Web3, like you're just going to get dinged.
Well, you won't be able to. You just won't be able to, right? So you'll have
full account.
So basically the internet that everybody uses today will become the black web.
Yeah.
It's funny because everyone's using it right now, but it's going to be the mainstream web will be Web3 for many reasons. Of course, you can already imagine after hearing what we just said, the possibilities of this. Like there's no more bullying, basically, right?
Yeah.
So that's what it's all about.
And it's like, man, it's funny because like, especially here in Canada, there's a lot of people that are on this like social credit score conspiracy, if you want to call it that, or theory or whatever, about coming here. But it's like, you know what, like, and Web3 kind of, you know, has that feel to it too as well. But it's like I said, if you're not a piece of garbage, these things shouldn't matter.
Yeah.
If you're just a good person trying to create content and do your things and not get fucking ripped off or scammed,
exactly,
then it doesn't matter. You know what I mean? Something like Web3 where everything's verified and traceable.
Because it's on the blockchain.
We want that.
That's why. So Web3 is the internet today built on blockchain technology.
And it basically Web3,
same as crypto, Bitcoin.
It's a movement to shift power back to the users, right?
Yeah, no middleman necessary. So you need to educate yourself.
Insecure, open, and resilient and private.
And creating controversy. People asking why, what's going on here, what is this, how does it work? No idea. And with Web3, there's not going to be, like we said, it's blockchain technology. There's not going to be people debating whether it was a 5 or a 7. It was a 7. Next thing.
That's
right.
It.
So
let's move. Yeah, exactly.
So it's just
everything will be verifiable. There will be no room
and people
have
seen it recently too with a lot of apps starting to require second verification or second step verification or whatever. That's also a part of the blockchain technology being integrated into all these things. And one thing that I'm actually kind of curious to see is are apps like Instagram and Facebook going to be able to make the leap onto the blockchain, or are we going to see other apps that are already built on the blockchain? Which, by the way, if you don't know this, a ton of them are already. This is already happening. There's a ton of apps out there. Audius is an audio one that's probably going to take over a Spotify, right? So, are we going to see all these apps on the blockchain take over these platforms, or are these platforms going to be able to they're not going to be able to take everything that they have and put it onto the blockchain because it has to be built block at a time.
This whole, how do I say this without sounding weird? It's almost like a Stockholm syndrome kind of thing. You know what I mean? So it's like people are so used to this centralized feel and the trust of like, having this third.
I have to go to this guy to tell me what to do.
I have to go to this guy because they got the important information.
He's going to tell me how to invest. He's going to tell me what house to buy.
You talk about Audius, for example. It's like Spotify. It's like, well, I have to put my music on Spotify because they say, and it's like I got to pay this money. I put my music on Spotify and do this because it's where people listen and stuff like that. And they don't understand these other decentralized things like Audius, right? But it's like, all these things, Web3 and Audius and any crypto development and all this blockchain stuff, it really gives the power back to us as users, cuts out that middleman that profits off of our existence. We don't realize that even just being on social media and all these things are profitable to other people, whether you think they are or not.
Yeah. You're trying to do it for your own gain, but you're actually filling somebody else's pockets.
Right. You don't want to believe in AI taking over your life, but you're a slave to the algorithm of these social media programs and things like that.
And the more people that learn this and get educated about it are obviously going to move towards it because it's beneficial for them.
And so the masses move towards these things, and then it's like, and eventually the masses move towards it, and then a couple of celebrities move toward it and buy some and get involved with it, and then it's like, well, okay, maybe now I can pay attention and we can all get involved with this, right? But it's like, jump ahead of that. Look at the fact that we are seeing this paradigm and power shift to the masses based on people developing things.
And it's
like
funny
blockchain
because
nodes.
regardless of who you think is going to be like pushing this, whether you think it's going to be the masses or you think it's going to be the elite, it's actually going to be both.
Yep.
Because it's literally the way that works best for everybody.
And the elite can capitalize.
Everybody can capitalize
But
on
it benefits us.
But the only people it doesn't benefit is the people that don't understand it and get left behind.
Yeah.
Because that's going to happen.
You know,
it always happens.
You don't even
There's
want
a
to
fucking hilarious commercial out there right now with the whole caveman in the wheel thing going on.
That one's good. That
So
one's good.
funny. And it's like,
Yeah.
it's so good. Oh,
Let's go.
idiots. That thing, that's not going to last.
The wheel. Yeah.
Just drag our stuff on sticks.
Yeah.
Oh my God. That's good stuff.
Yeah. So, I mean, yeah. And that's just it. So it's like, and it's not even that the people who are late or whatever who don't believe now, that I don't believe that they're going to end up left behind because the reality is that this is going to change to a point where everybody benefits, whether you believe or
the
not.
best way to guarantee a positive return on your investment is invest in something that will be required by law. And that is what's going to happen. Everybody's going to have to be a part of the system. It's because for so many reasons. Many reasons, and if you've been watching the show, you've been picking up a lot of them. It's so much better than the old one. It's the future, right? So invest in what will become law, and you will have a positive return, guaranteed. Because, well, obvious reasons, really, right? Everyone's going to have to jump in, and once everyone has to jump in, I mean, everybody has to use it. For instance, like, I don't know if anybody pays attention to the stock market and they invested in Moderna in 2019, you're
yeah.
Okay, so just saying that's how it works. And so get on, you can't beat them. Join them.
But it's not even join them. It's just being. If we look at the whole world and our whole lives as an investment, and that doesn't mean if it's your time, your health, whatever. Everything's an investment. Okay, so I want to invest my time. I want to invest my health into things that give me good return. So if we can get onto the right side of the trade and look at this whole life as a trade, as if it's for our time and our value. And we look at the right side.
Every decision you make is a trade.
So it's like, yes, the consumers have the power, but don't be on that side of the trade, because we want to be on the side of the trade of the people just holding the value and not consuming whatever that trade is, right? So, and that's just we could be on the side and that big money and all these corporations and all that thing, they're going to see that, they're going to invest in Bitcoin, and there's going to come a point where we hit that point where they've regulated it enough, and they've crossed the T's and dotted the I's enough that these big companies and big investments will come in to get their money in before the masses really blow it up. And because this network is going to blow up based on its users, but the early investors are going to be the ones who benefit the most.
Which is the case with
everything. And these people
everything.
are already looking ahead. They're like, oh, okay, hey, look, the whole masses are going this way. Everyone's starting to say Bitcoin, you know what I mean? It's got the potential to eliminate a lot of the errors in our financial system today, right? So they're going to have to do a whole bunch of BS and paperwork and regulations for big money to be comfortable allocating, whether it's 1% or 3% of their.
And we're talking trillions.
We're talking trillions of dollars, even if these companies are
on the sidelines.
1% to 3% of their portfolio allocations to Bitcoin, right? And it's like, I don't know. It's hard to explain the whole point where people are so distracted that they can't even see the crumbling fiat dollar system. There's never been a whole one, not since Egyptian times. There's never been a fiat system created that has ever succeeded. Every single one has gone to zero. U.S. dollar is going to be no different. But we can't see that now.
Well, yeah, it'll shift.
As these changes slowly happen.
It seems to me like we're going to see some sort of economic crisis, which is going to fuel the digital revolution. Because people are starting to realize we've been building things and stuff for too long. The stuff, we're starting to be taken over by stuff. Garbage is piling up. There's too much stuff out there. We've produced too much shit. It's so funny when people say there's a shortage of something. That's not how humans work. We overproduce. There's never a shortage of anything.
No.
There's always too much of everything. So including the dollar that you all use, right? So it's like, it's not going to be...
Yeah.
I lost my train of thought on that one. Where was I going with that?
And it's like you said, the trillions will come in, and when they finally sort it out, whatever they have to do to sort it out inside their system in order to shift their wealth into more digital assets and things like that, because we know that's the way that it's going.
Right. Yes.
Once they get over that, whatever that hurdle may be, we're already seeing the decline in stocks starting to come now too.
We're seeing
after the last 2 years of such
exactly.
Right. So it's like if they see this
Stimulation.
future, if they see the future in digital assets, and we're starting to see the price of normal stocks and bonds and things like that, and even gold holding roll over, you know what I mean?
But not only that, a massive fake out. Like things are pumping right now. Like on a small scale, it's funny because on a small scale, if you're trading daily, you see the fake out and you take the short and it usually goes down, right? Or you see the drop, and then it breaks out. And it's funny because we're seeing...
I don't short Bitcoin.
We're seeing these commodities on a daily or even weekly scale possibly making a massive fake out because they're pumping to almost all-time highs.
So actually, that was one thing I didn't mention in my chart there. We're not going to bring it back up now, but one thing that I didn't mention in my chart actually is, so the daily chart, it's technically going and looking like it's taken a little bit of a cool off, and we kind of predicted that coming. We're a little bit lower than we had hoped, but it's still just kind of cooling off and trading sideways in that range. But if we look at the weekly chart actually has bullish indications. So we got that at the end of the week last week, we made a bullish cross on our MACD indicator, and things on the larger time frame charts were looking bullish. So this on the 4 hour and the daily and things like that, kind of cooling off and coming under levels we wanted to. Absolutely could just be a fake out. But we got things like interest rate hikes and things like that coming into the economy now that could potentially cause stocks to come a little bit lower.
Well, eventually we're going to see, because it's funny because years ago, Bitcoin and the stock market did not correlate at all.
Now
and they do currently and have been for a little while, but eventually we're going to see another point where they stop again because the stocks are going to fall. People are going to stop buying things when people aren't producing.
Crypto will decouple from those markets, in my opinion. So we saw a little bit of that in January, February, and Bitcoin was kind of getting ahead of the NASDAQ and some of the tech stuff like that.
The reasons why we see this, just to throw this out there, is because the people that are taking control of these trillions of dollars are diversifying their investments. So that's why we see them correlating so closely, because these people are putting so much money into all these assets at the same time to protect their investment. But eventually, when you start to see the economy slow down and other investments are clearly not going to be for the better, they're going to put their money where they're going to make money, because that's their job. So you're going to see the separation, because so basically we went from your average stock investments to your crypto down, and then this is stock, this is crypto, and then so we're here now, right? And then you're going to see this, right?
And
We're in the turning point where we are there together right now, but it came from here, so we know it's going to end up like this. The direction they're both going. I mean, obviously, you still need to fucking invest in certain stocks, tech stocks, and that sort of stuff. But like
holding, it's weird because I never was like much of a gold buff and really, you know what I mean. But honestly, like either whether gold goes up or down, the fact of just holding a stagnant value.
Well, the price of gold just speaks for itself. It's under 2K. And it's been hovering and it's been trading sideways for decades.
But if you had just even if it stayed at the same value, if you'd put your money in there, your money's still worth the same. But
True.
But holding your fiat dollar for the last 2 years has gone down huge.
True.
So if you had,
at least it's maintaining.
Say you had, if your budget was 10K and you had 10K in a savings account or whatever, it's like, okay, I'm saving this money. But if you had put that, you keep that money in fiat, and that fiat is losing its purchase power, whereas that money in gold is going to hold its value for your 10 years, your 20 years,
exactly.
your whatever.
And
right?
of course, the idea behind crypto and Bitcoin is for not either of those to happen, but for your value to increase over time, with the scarcity and the deflationary asset as set up as it is, right?
Bitcoin,
so
for sure.
Exactly. So better than gold, obviously much better than fiat, and the future. So I don't know.
The future.
Get in while you can, because we're still early. Like like I said, right now we're just happy. We're at the point where we're crossing over. There's still a long way to go. In all this sort of
thing
stuff.
that people need to understand is like, this is a big hang up that I hear from a lot of people. So a lot of people, starting to reach out now and be like, oh, crypto this, crypto that. I'm interested, but I feel like I'm too late. It's like, okay, well, you're never fucking too late, because either way,
it's going to take time.
Well, Bezos predicted the future of fucking shopping in 1994, 1997.
Yeah.
And nobody believed him, thought he was a madman, and now he's the richest man in the world.
Yeah.
You know what I mean?
25 years later.
And it's like, because these things grow and they grow and they grow over time based on Metcalfe's law, this network, you need to understand that it's not going to stop, and it's not too late because its growth is exponential, and its growth is only going to keep going.
You're always going to wish
like,
you got in yesterday.
Right? In 2009 or 2010 or 11 or 12, when Bitcoin was $1 or whatever, it's like, okay, sure, that would have been the best time to buy it. But just because it's $50,000 or $40,000 today doesn't mean the market's not going to grow. Because 2 years ago, it was only $7,000, right? In the end of 2019, I think Bitcoin was worth $7,000. Right. So it's like, oh, and people thought they were too late then, but now, and then it went up to $69,000.
Yeah.
I was like, okay, well, you maybe thought you were too late at 69. But then it goes back down.
Well, it's so amazing that you can just dollar cost average, because you can't dollar cost average into real estate.
No, fuck no.
So it's amazing that you can just even do that. It doesn't matter whether it's up or down. There's no excuse for being too late or too early or whatever you think. Like, oh, I should have bought yesterday. I should have bought yesterday. Well, if you didn't buy yesterday, then buy today.
Just like exactly real estate, you're never too late. Okay, well, I wish I bought a house in 2015 when the market was low, but it's like,
when I bought a house in 2015, the market was extremely high. At that time,
it wasn't high.
It was, but at that time,
I bought a house in 2009 and sold it for the same price in 2015.
But when I bought my house in 2015, it was like this prices are crazy, man.
Yeah.
Like, you got to get in quick because it's going nuts.
But it's like,
here we are 5 years later.
It doesn't matter. You just got to get into the market.
Yeah.
Get into the market because you're always going to be building equity in that market, regardless of where the price is.
Yeah.
And that's the same with the housing market because you're paying into your own value. Right. So it's like, okay, maybe my house came down a little bit of value, but I paid off all this initial and I paid off all this interest and I did all this. And now that, 2 years later, 3 years later, we go up on a 10 or 15% basis. It's like you said, it's that time in the market.
Yeah, time in.
Because you bought at a high point, whatever. Okay, 2015, I bought my house, but now it's 2022 and I'm up $300,000.
Yeah.
Right.
It's time in the market, not timing the market. Don't try and wait for the crash. Always buy the dip. Don't trip by the dip.
Don't trip by the dip. Okay. Anyway, we're dragging it out a little bit here. Thank you very much. Thanks for tuning in. If you caught it this far, please like, please subscribe, catch the new content.
Let us know what you think about Web3.
Let us know what you think. Drop a comment. Are you still in? Are you out? What you doing?
Biggs and Boggs out.
Biggs and Boggs out.
Peace.
Biggs and Boggs.